just another meeting. Okay, thank you. Thank you and welcome community to our duly special council meeting. It is on the Lake Erie Connector project. As you know, this has been ongoing with community engagement sessions for a number of weeks and months leading up to this point. We've had multiple open meetings on this. There's been opportunity for members to join in on the discussion and get their input feedback on this project itself. So we do have come to a point now decision. This is live with community so that you can be a part of sunfuture.com. And if there's any further information, I'm sure Matt and his team can further answer as we move along. We will be looking again to do in a presentation format, and then we will go into questions, comments from council as well, just for the community. So with that being said, I'm going to pass the floor over to Matt to begin introductions, and we'll go along as we move along here. So over to you, Matt.
Okay, thanks, Chief. Just so you know, you're very choppy, at least on my end. So I'm picking up tidbits of information as you're speaking. I don't know if that's the same for the rest of the audience. Just so you know, we might ask you to repeat certain things if we're not clear on any questions you might have. So before we start, I'll ask members of our advisory committee on to just introduce themselves real quick.
Hi, Audrey Hill. I'm the chair of the advisory. Good morning, everyone.
I'm Tabitha Curley. I'm a advisory committee member.
And then members of our board.
Rachel Martin. My camera's messed up, but I'm with the board.
Janice Montour. I'm the chairperson for the board of directors.
Claudine, Justin.
There you go. Claudine Albert. I just newly joined the board just shortly about a month ago. So looking forward to this now.
I thought I saw Justin's name. Maybe he's not on at the moment. Justin Porter was on, but maybe he had to drop off. Okay, from the staff, Nicole, you want to introduce yourself?
Yeah, I'm Nicole Kohoko. I'm the Director of Corporate Affairs for the Development Corporation.
And we have a guest who's a new employee for the Development Corporation. His name is Denby. You'll see his name on screen. This is his third day, so this is an opportunity for him to get exposure into the council process. So I won't ask him to introduce himself. I'll just let you know that who is the Nandaram name on the list. And then everyone knows myself. I'm Matt Jameson. I'm the CEO of the Development Corporation. Well, Chief, if you want to have staff, council staff. Do we have the chief? Is he here?
Hi there, my apologies, Matt. Can you hear me okay?
That moment we can, yes.
Okay, I apologize. I am getting a message that my connection is a little bit unstable. So I will at this point then, Matt, if I can pass the floor over to who will be leading us through the documents.
Okay, I'll do that. So Nicole, if you want to share your screen and pull up the briefing note to the council. I think as Chief Hill mentioned, there is a tremendous amount of materials associated with this project. A lot of due diligence work has gone into this to assess what this means for the community and what it's all about from a risk perspective. So just some background real quick. This shouldn't be new to the audience, but the Lake Erie Connector is a bi-directional 1,000 megawatt transmission line that connects Ontario with the United States through Pennsylvania. Effectively, we've heard it characterized as a big long extension cord that is buried under the Lake Erie, and it serves a dual purpose of transmitting energy in both directions to both countries. This project has been around since the early 2010, 2011, and over the course of time, it's gone active and then silent, and most recently, this Ontario government has a renewed focus on hydro rates and ways in which they can unlock savings for the ratepayers. And so it reemerged as a potential opportunity for a development. In addition to that, Canada Infrastructure Bank stepped up and announced its intent to provide financing, subordinate financing of up to $700 million. And that, I think, was part of the catalyst to restart our talks with the Lake Erie Connector. The Lake Erie Connector is actually a project that was under development by a different company before ITC, who is the current owner. And ITC is a subsidiary of Fortis Inc. And Fortis is a very large publicly traded company with $57 billion worth of assets. And they operate in rate-regulated markets all throughout the world. One of their notable projects is the Watakiniat Power Project in the far north with 24 First Nations. They do have they certainly have a lot of experience in Ontario and do have some experience dealing with Indigenous communities, which I think has been beneficial for them in their dealings with us. In 2021, October, the council at the time assigned the Development Corporation to take the lead in the project. And at that time, we dug in with ITC and began looking at what this transaction could mean for the community. I think the reason why the Development Corporation was tapped to take the lead is because we have the corporate structure to create a special purpose entity or the corporate model that we could use to effectively hold any ownership interest. We also have the capacity to conduct investment due diligence and to secure equity financing for project participation, and as well as the ability to coordinate community outreach and to manage assets. And we have our tax mitigation strategy, which I think will come in very handy in this particular project, so that we insulate ourselves from corporate tax as an Indigenous community, which is not easily achieved on its own. As a best practice, we entered into a confidentiality agreement and a capacity funding agreement with ITC. And as part of the capacity funding agreement, they provided funding up to $250,000, which was utilized to carry out our due diligence exercise for the project. Now, in February of 2022, we brought a term sheet to the council, and it was accepted by the council at that time. And essentially, what that term sheet did was put forth participation options for the community. And the first option was an equity option of 7.5% ownership. As a 7.5% owner, we would be required to invest approximately $26 million. And that could have a potential life of a 55-year contract term. And ultimately, we modeled it that within the 40-year initial contract term with the Ieso, who would be the customer, and the Ieso is the Independent Electricity Systems Operator. They're the operator of the energy grid in Ontario. They would pay essentially $44 million over the first 40 years, and potentially a lot more than that if the contract is extended up to 55 years. And that was the goal when we initially got tangled up in this project in February. That was the base case financial model that we started to stress test initially. The second option, which is not an ownership option, which is a participation option, best to characterize it as an equity model, where the project would pay the community a fixed payment of $1 million a year, approximately, over the next 40 years. It may not be $1 million, but I think it was between $750,000 and $1 million over the next 40 years. And so that would yield between $30 and $40 million over 40 years. and if the contract was extended as much as 58 over 55 years. The interesting thing is, the participation payment as a royalty does not include any ownership interest in the transmission line. So if the asset was ever sold in the future, we wouldn't have any claim to the assets by way of an equity position. It would just simply be sold, and you have to renegotiate with whoever the new buyer was to potentially strike a royalty deal, and whatever that might look like in the future is highly uncertain. And then the third option, given the sensitivities with the community and these types, the third option was that the community has the right not to participate. And in that case, we don't participate in equity and we don't participate in royalty. That doesn't necessarily mean the project won't go ahead, because the project itself has secured all of the required approvals from the federal Canadian energy regulator and the Ontario regulatory environment in order to have this project constructed. And so I think that part of the reason why we were being approached, it's not truly altruistic for ITC to approach us with this offer. I think that they are aware, acutely aware, given their experience in Northern Ontario with Indigenous communities, of the sensitivities and the importance to recognize Indigenous rights and land interests. So I think that that's top of mind for them. But our participation in this project will also provide a high degree of comfort in the project financing lenders out there. They look for all elements of risk. And if the Indigenous community is not supportive of the project, I think that's a flag for them and could potentially trigger higher interest rates. And regulators, both federally and provincially, certainly would prefer Indigenous participation in projects to demonstrate support, which would go a long way to mitigate any renewal periods into the future if the Indigenous community is actually a partner in the project. So those were the options, and that's why they presented them to us. The next element of this proposal under the term sheet was something called community benefit payments. And in the event that we chose royalty or the equity, the partnership was going to is prepared to enter into a community benefit agreement with Counsel directly. And essentially what that is, it's an exchange of compensation for support. And the monetary calculations are, there would be an initial payment of $100,000 paid within 10 days. And an annual payment of $225,000 for 3 years as the project's being constructed up to the financial closing date, which is about 3 years from now. So totaling $900,000. And then commencing after commercial operation date, COD, a payment of approximately $118,000 a year would be made directly to the council for the full course of the contract. And so we estimate the total value of the community benefit payments to be approximately $5.7 million over the next 40 years. I'll talk about some of the considerations of support in a minute, but nonetheless, I guess the value proposition here under the community benefit payments are, on one hand, they're going to pay for community support. On the other hand, they're going to expect the council to support the projects as best as it can within its power and authority. So the current situation is, all right, one sec here, is that we have gone through and completed the community investment review and due diligence, which included our law firm as well as Counsel's law firm, Blake's. We've hired engineers, environmental engineers, financial advisors, and a community engagement consultant to carry out this due diligence work. All those costs were funded by the capacity funding. And so from a legal perspective, the legal counsel for the Development Corporation is a law firm downtown Toronto called Fogel & Rubinoff. And they've really been charged with leading the review of the definitive agreements associated with any participation in the project. And so that includes, if there was a decision to choose equity, we would enter into a limited partnership agreement. If there was a decision to choose royalty, we would enter into a project partnership agreement. The community benefits agreement, which is something we're going to talk about shortly, was attached, but is attached the materials, but was also reviewed by Blake's as well as Fogel & Rubinoff. And they reached some consensus on that final document. And we have included in a package a comfort letter from Blake's confirming that they are comfortable with the provisions in the community benefit agreement with respect to any land claim or land rights interests that the council may be sensitive to. Other legal review documents included assessing a limited recourse guarantee, securities pledge, and subscription agreement in the event we became limited partnerships. All sort of documents that are relevant and will be important depending upon the option that we select. I think right now it's safe to say that the definitive agreements that I just listed are pretty much in their final form, and they capture the transaction and are designed to protect our interests and have been vetted by our legal counsel. But depending on the options selected, there may be additional legal work required, because we are, seemingly every day there's changes happening, certainly in the commodities market and interest rates. So the project economics continue to ebb and flow. And until we actually put pen to paper, there may be some minor changes required to the documents to capture the most relevant and updated perspective. So along with the legal review, we also have a comfort letter from Fogler Rubinoff, which was attached to the package, which confirms to the council that they have undertaken their legal review and are comfortable that the documents capture our understanding of the actual financial transaction. So that's the legal review. The second review was a financial review, and we use a company out of Toronto called First Canadian Properties Limited, and they've done financial modeling work for us for the better part of 10 years. And they have completed their financial assessment, and there is a report that was attached to the package. And their report included assessing the most recent June 30th financial model, as well as examining the independent engineering, the lender's technical advisory report, and assessing the revenue agreement with the Ieso, which is the transmission procurement agreement. Now, the report is there. It's pretty comprehensive. I can speak about it in a minute, but I think it's important to say that the conclusion of the report was that, from virtually all perspectives, their analysis was that this represents a good opportunity. Nicole, can you please advance? The equity option presents a good opportunity for the community to seriously consider, and they're satisfied that the opportunity itself is attractive, and that while royalty and equity are both attractive, they felt that the equity option was provided the better long-term yield for the community. So just to stop there for a second, the financial report was in depth. There was two models. The initial model was provided to us in May, and the secondary model, which I just spoke about, was assessed on June 30th. And as part of First Canadian's work, their job was to reconstruct the financial outcomes for Six Nations to make sure that the numbers we're being presented with are validated through source testing of revenue documents and other contractual agreements that are in place. And that's why we reviewed the independent engineering study and we assessed the transmission service agreement. And there was a comparison between the May model and the June 30th model. I think it's important to note that some of the economics have changed, and we will talk about the notable changes in a minute. And those notable changes really deal with an increase in ownership from 7.5% to 10%, and this option from the Ieso to purchase the project at the end of 40 years. The increase in equity from 7.5% to 10% was triggered largely because the economics of the project had changed. Most notably, interest rates had gone up, and because of the rising interest rate and the increase in commodity pricing for the cable, the returns that would be expected as an equity owner had gone down substantially. And so the equity option at a 7.5% ownership rate just was no longer appetizing for us. However, we were successful in negotiating an increase to 10%, and which got us back close to what the original value proposition was. And so I will talk about that in a second. But from a high level, the project itself is a $1.7 billion transmission asset. It's owned 50% by a Canadian limited partner and the other 50% by a United States limited partner. For clarity, we are a potential 10% owner of the Canadian portion. The project itself generates about $2.6 billion of revenue over the next 40 years. And the Canadian equity requirement for the 50% on the Canadian side is about $350 million. As I mentioned earlier, the Canada Infrastructure Bank is in for about $675 million, and the rest would be financed through project financing. As part of our participation as an equity investor, ITC will go out to the market and secure incremental senior debt to fund our equity on our behalf. And so essentially what that means is the money that we need to invest will be funded on our behalf by senior debt, where we don't have to go to our banks ourselves. The incremental senior debt would provide that mechanism for us. And essentially what happens is we pledge our distributions over the next 40 years to partially repay that debt over time. And that's beneficial to us for a couple of reasons, because it enables us to access $33 million of equity financing over an amortized period of up to 55 years at a fixed interest rate. So we don't have to worry about refinancing this thing at any point in time. And it's non-recourse, and non-recourse means that we don't have to pledge any additional security or any commitments over and above agreeing to the loan agreement and that waterfall structure. So, they can't come back on the development corporation or the community and say, hey, this project went sideways and you owe us this $30 million. We are insulated from risk in that regard. And so over the course of that 40-year return, we expect a total return of about $43 million over 40 years, which is fairly close to what we originally expected back in the original term G model. And in the event we have a contract extension, which is what we're hoping for, the community could benefit upwards of $70 million. So I'm just going to move forward here. The environmental peer review is the next study that we undertook. And the environmental peer review was carried out by a company called Negan Burnside. Negan is an Indigenous engineering and environmental consulting firm. And this is a very highly complex project. It's complex because it involves land, it involves federal regulations, provincial regulations, archaeology standards. And so we needed to hire an expert to dig through all of these materials. And if you look at the Negan report, I don't know, several hundred pages long, there's lots of materials there and lots of reference points for you need experts to actually assess. And so what they did is they conducted a peer review and assessed the approval process, the cumulative effects, the effects on fish and fish habitat, water quality impacts, environmental management, air and noise impacts, terrestrial, which is on land habitat enhancements, cultural impacts, and archaeology studies. And that report was submitted to the council on June 27th. So the council does have it. I guess from a highlight perspective, there were no major risks identified in the report. There are low and medium risks, and all of those risks have a mitigation plan, and that mitigation plan is formally documented in the final report on table 6, which is pages 42 to 51. There is a lot of material there, and I admittedly I am certainly not an expert, and if there are questions, we do have experts that we can call to help answer questions today or in the future.
Just really quickly, Matt, if I can interrupt, I see Councillor Nathan has his hand raised.
Thanks, Chief, and thanks, Matt, for the information. I just want to double back a bit on the equity play. And just to confirm, you did mention it was at 10%. And the second clarifying question is, all those agreements you listed, it's not a menu, right? We get all of those agreements plus the equity play? Yeah.
Oh,
no,
so,
not that.
Not that one, not that on the list, Nathan? Different?
No, you just had a list of all of the community benefit agreement. Oh yeah, right here. The community benefit agreement, the project participation. I guess I heard in there, was it the limited partnership where the equity play was at?
Yes, that's correct. If we chose option 1, we would enter into a limited partnership arrangement with the project. If we chose the royalty option I talked about, we would enter into that project participation agreement, and we would not be a party to the limited partnership agreement.
Yeah.
Okay. And in that case, the limited recourse guarantee, the securities pledge, and the subscription agreement would not be required if we are a royalty or a project participation agreement participant.
Right. Okay.
Those documents listed they form the definitive agreements that we would enter into depending upon the final selection from the council. So if the council chose The equity limited partnership agreement would apply along with the limited recourse, the securities pledge, and the subscription agreement. But we would not enter into the project participation agreement because we're not accepting a royalty deal.
But the equity, just to confirm, you said the equity was at 10%?
That's correct. We renegotiated an increase of 10% from 7.5.
Damn, it's gonna be a tough decision. Okay. Gotcha, following.
Okay, and then moving on, the community engagement is something that was also a pretty extensive process, something that I think this is an example of, hopefully what community engagement standards would look like at some point in the future. It was a 60-day process. We had 10 sessions, 9 of them were in person, 9 of them were virtual and 1 of them were in person. The final report was submitted to the council, and it did capture all of the materials that were sent to the community, all of the comments that we received during the sessions, as well as writing comments. And so if anybody was interested, if you went to page 72 to page 95 of the Dillon report, you will see a very interesting list of questions that we received, which were all documented through our webinars. Not all were negative. We had some positive, constructive questions. Dillon Consulting was the company who led that process. And so there is a level of independence there. We did not write the final report. We did not control the narrative in the final report. It was designed to be an objective report of what was heard during those webinar sessions. Unfortunately, there were only 49 direct participants, but we did reach an audience of almost 2,000 people through social media, through Facebook. And we did have some lively discussions on Facebook during some of our webinar sessions. The end result was that Dillon could not conclude conclusively what option was most supported by the participants. And in fairness, there was 49 people there. And so I don't believe that 49 people should be the determining factor on what option is the most suitable. This is why the final decision rests in the hands of the council to make. As far as community engagement is concerned, we also reported, and they reported publicly, ITC reported publicly that they have been engaged with the HCCC via the HDI since as far back as 2014. So they've been talking about this with them for a long time. We're not a part of those discussions, so we're not aware of the status of those discussions. That's it for the HCCC and the HDI.
Just really quickly, Matt, on that part. So in terms of the awareness, they potentially could have a same type of deal that we're walking through?
No. So there is a commitment from ITC that they've made two offers to First Nations in Ontario, and those First Nations are described specifically as Six Nations and the Mississaugas. And they've also committed that no other offers of a similar nature will be made to any other First Nation community or interest in the province.
But that doesn't mean, regardless of the same opportunity that we're given or walking through at this point, that doesn't mean that there still is there could potentially be other funds flowed through.
Yeah, we don't know. We don't know the extent of those promises, but yeah, there hasn't been any disclosure of any of those types of negotiations or costs in the financial model that we've seen. So I would be very surprised if there was financial compensation that flowed to the HDI outside of the financial model, but none of them have been disclosed to us, Chief.
Okay, thank you.
Okay, moving on, and I've sort of touched on this already, but these are the notable changes that have occurred since the term sheet was signed in February. And I mentioned, so the rising interest rates has really wreaked havoc on the financial model. And if you think, it's a $1.7 billion project, we got over $1 billion of consolidated debt on the project, and so any increase in any basis points of financing costs really has a negative effect on the project economics, as well as commodity pricing has gone up, and the cable itself is the consumer of lots of commodities that have been affected by market conditions of late. So all of that being said, the economics have changed. And as we've gone looking at, and we looked at the most recent June 30th model, you know, the economic returns as an equity investor were no longer attractive. And so that prompted me to go back and I think it was a pretty much of a very challenging decision for ITC, but we were ultimately successful in increasing our ownership option to 10%. With that increase, our equity investment would go up to 33 million, which was supposed to be 26 million at 7.5%. And our net cash flow to the community would be about $43 million over the next 40 years. Now that is about in line with what we originally thought it would be at 7.5%. And that's one of the motives we had for increasing our ownership to 10%. It's important to note that the cash flow from the equity investment is not distributed evenly over 40 years. So if you look at $43 million over 40 years, you can't just divide that in half and say, okay, we're going to get $1 million a year. That's not the way it works, because the debt itself is sculpted, and which means that our cash flow hovers, you know, below $1 million a year for the first 40 years. And then at year 40, there is a sizable one-time payment option that may occur in the event that the contract is not extended. So as I mentioned earlier, this potential project has a life of 55 years. We only have a contract with the Ieso for 40 years. At the end of 40 years, we need to renegotiate and extend that contract, ideally for another 15 years. If that happens, you know, the returns for the community will go as high as 70 million. So as I mentioned earlier, as it relates to the 33 million, ITC is going to secure our equity financing through incremental senior debt. And as I also mentioned, that will provide us with a lower cost of capital or interest rate certainty over time, and amortizing over 55 years, which puts more money in our jeans because we can extend the repayment period. And the debt itself is non-recourse to Six Nations.
If I could have another question, sorry, Matt. Can you talk a little bit in terms of the structure, in terms of the 10% that will be owned, obviously through the development corporation, but through a special purpose corporation? Can you talk a little bit about that structure?
Yep. I don't know if I can share while Nicole is sharing, but Nicole, do you want to just put your screen down for a sec? Just if I can try and do this here.
I think it's important to understand from a community perspective of, you know, what exactly the structure looks like in terms of corporations. I mean, we have a number of numbered companies and so forth. And in fact, I think even the HDI is a corporation themselves and have a number of companies as well. So I'm just wondering, in a sense of you know, better understanding of you know, what exactly the special purpose corporation in terms of you know, what we'll be holding through.
Okay, I misunderstood. So just very quickly, then I just have a document, I think you can see it, which is a summary of the transmission structure of how this entity is actually held in Ontario. And so where we fit in is we're over here, and if you can see my mouse, First Nations, that would be our ownership interest in this Lake Erie project. And so there are a number of inputs and interests associated with the Lake Erie Limited Partnership. So I think your question, Chief, is what does this box look like for us? What is our entity that holds this? And to answer that question, I'll ask Nicole to speak about our limited partnership model and the master trust that is designed to help preserve our tax exemption in this case. Nicole?
That's exactly what I'm getting to. Thanks, Matt.
Nicole?
Yeah, sure. So if we elect to have an equity investment, we would hold it directly in one of our trusts that we have, the Six Nations of the Grand River Master Trust. The whole concept of what we call at DevCorp as our trust entities is to ensure that we keep tax exempt income coming in through that stream. So the reason it's held in a trust is the beneficiary of the master trust is the Economic Development Trust, which means automatically each year at December 31st, the surplus funds within that trust are allocated to the Economic Development Trust, who in turn allocates it back out to the community through their call through applications. So the line of beneficiaries through that trust is what actually deems that to be tax exempt status. So we would hold our interest directly in that stream so that we would be able to realize those benefits.
Okay, thanks. Thanks for that, Nicole. And sorry to interrupt your screen share. The other question I have, Matt, and I apologize if I'm asking too many questions, is in relation to the United States partner. Are there any American tribes affiliated with that partnership?
Not to my knowledge. The U.S. portion of ownership is controlled 100% by the U.S. Based entity, which is also ITC. So ITC is the counterparty for the Canadian side with a partnership with us on the limited partnership here, and they're a 100% owner of the partnership, the limited public partnership they have in the United States, limited liability corporation, I should say, in the United States.
Okay, and thanks for answering that question, Matt. Because and just the other week or some time ago, we had attended the J Treaty Border Alliance meeting, Councillor Sherry Lynn and I. And one of those pieces, in terms of furthering our sovereignty, as we all know, we don't have any borders, from our perspective with respect to the J Treaty. But it's looking at the economic opportunities with American tribes. And I wanted to also look at, what opportunities currently exist that we could further pressure, our rights and what we have of, doing business with American tribes and looking at economic opportunities. I know this isn't particularly related to this, project per se, but wanted to at least flag this for opportunity in the future. Of potential business opportunity and economic opportunities with American tribes, while looking at our inherent right to do trade and commerce and so forth, and furthering the J Treaty in general. So I just wanted to make those comments just in relation to my question, as if to any American tribes were involved on the U.S. side. I do see Councillor Hazel has her hand raised.
I just wanted to ask for clarification with the return on the monies each year. Like, did I hear right when you said it would go back into the corporate for? Would it be used to fund the applications for funding? Is that the intent? Sorry, my dog's.
I think right now, and I'll ask Nicole to clarify this, but right now the way the model is set up is that the master trust sits in our organization, and its sole purpose is to flow funds to the community. We call it the community beneficiary. And right now, the way that flows is through the Economic Development Trust. And the way that the Economic Development Trust disperses funds is through that intake process. Now, with that being said, we are in the middle of developing a proposal, which is going to come to the council, which will change and alter that structure, which could potentially enable funds to flow more directly to the council in certain cases. It's not, we're not there yet, but it is a model.
Could I just add another comment, please?
Yeah.
Sorry, go for it, Hazel.
Yeah, so what I'm wondering is with money coming back into the community from this whole project, could it not be earmarked specifically for bigger matters, such as the need for better roads, like our roads are breaking down, new infrastructure and all that, instead of just having it, dealt out with an application for other things? I'm thinking that should be earmarked for bigger things that this reserve needs. Thank you.
I think part of, we understand that's a big challenge for the community, and that's one of the reasons I mentioned about the new approach we're going to bring to the council, something we call DevCorp version 2.0, which would enable funds to be directed to the council, and the council decides where they go, rather than us using this intake process. that's something that's been under assessment for almost a year. And we're putting the final strokes on it. But nonetheless, I think it's safe to say that our interests are aligned. The focus for me and for us right now is what's the decision that's in the best interest of the community. And then once we make that decision, how do we make sure that those financial benefits flow to where they're needed?
Yeah, I think that's a good point Hazel's raising, and thanks, Matt, for your response. Because at the end of the day, yes, we do get some funds to do some of these things, like we have experienced most recently our road conditions. Everybody, seems to think that we get all of this money for roads. In fact, we're underfunded across the board, which makes us have to rely on the importance of these types of initiatives and projects in terms of own source revenue. I mean, like, we have schools that need to be built, we have lodges that need to be, upgraded, rebuilt. There's a long list of infrastructure gaps and needs within our territory. We have to finish water lines, we have to finish connecting homes to water, like the list goes on, right? And so I think, in terms of those bigger projects and initiatives is something that we can further discuss in terms of how we can move forward more collaboratively in a way that we see things in a quicker time frame, as opposed to getting rid of the saying, well, I'll probably never see it in my lifetime. I think that's something that we need to start to shift away and to say, make these a reality of the now, and be able to do these types of long lists of needs within our territory. I'm going to go to, I have two more hands raised. I see Councillor Sherry Lynn and then back to Councillor Nathan. Sherry Lynn, you have the floor.
Yeah, I guess mine was along the same lines as Hazel, in the sense of this money coming in. I don't want to see it, if it has to be in a big pot of money, but I would like to see it designated for specific things, so the community knows that this money that is coming in from this project is going right to certain things, and not lumped in or not having to write proposals. So I'm along the same lines as what you just said, Chief, and along what Hazel said, because the community needs to know where this money's going, and let's show them where this money's going. It's designated for these things. Thanks.
That's exactly right, Sherilyn, and do agree with you as well. Like, even too, I know, housing, big issue here. People need land. We got to get members in homes, suitable homes with water, and the list goes on. So I totally agree. I think it's something that we can look to once we make whatever decision is made today in terms of next steps. Nathan.
Yeah, thanks, Chief. And just along those lines of the last two comments as well, I'm because I only have probably another hour, I'm just going to let council know kind of where I'm standing. I'm more along the lines of the limited partnership model with the equity play in there, because that gives us that flexibility at the end of the day to do a lot of that creativity. The other thing it allows us to do, which not too many other First Nations are able to do, is the establishment of loans with that equity play, because you have that flexibility. I'm not talking like, in a year or two, but 10, 15 years down the road. It does give us a little bit more flexibility to do that with the equity play. So I know this project is moving forward with or without us. I hope we select that we're going to come along with this project. But I'm more of the lines of the limited partnership model. I just feel community benefit agreements are a thing of the past with royalties. That's a thing of the past. We have to move into 2022 and beyond. And in the equity play and the LP model that was displayed will give us the flexibility into the future, I feel, to be able to do the things that Sherry Lynn and Chief and Hazel are suggesting down the line. So I'll leave my comments there because
Okay, appreciate your comments, Nathan. Perhaps maybe at this point in time we can get back to the screen share. Nicole and Matt can continue. I know time is of an essence, and so we've had multiple time to go through these documents. Sorry, just before you do that, I'll head over to Carrie.
Yeah, Matt, you say this line going in is bi-directional. Is there anything in place that would monitor which way the flow is going of the power?
Yeah, so the way that the asset will be operated is not within our hands. So the Ieso, which is the Independent Electricity Systems Operator, will actually manage the asset. They're going to pay for it over the course of 40 to 55 years, and they're going to control how the energy gets used. And believe it or not, it's a very complex model, and a challenge that the Ieso has is to try and match supply and demand in the province at any given instant. So if you can imagine, the Stelco turns on one of their production lines, there's a huge draw in the energy system. And if the energy is not available in the regional market in Ontario, they'll use this line to draw power into the United States. And they can use it in short bursts of time. And so it is a very, very versatile tool that can be used in instantaneously to send power in either direction. And so for us, for Ontario, for ratepayers, it's good because the energy that we generate in Ontario, and in particular, the energy that we generate through our wind and solar farms, it gets curtailed right now. So what that means is when wind turbines turning and there's no energy demand, the energy is produced and lost, and people still have to pay for it to be produced. So which is costly, and it costs everybody's hydro bill to go up. What this asset will do is it will allow us, the province, the Ieso, a mechanism to direct that power into Pennsylvania where there may be a demand. And it's just a tool that doesn't exist in the toolkit right now. And it's highly versatile. And I think, we believe based on the model that there's hundreds of millions of dollars. I think it's $4 billion of ratepayer savings over the next 40 years, attributed with having this new tool allowing the energy to go both directions.
And I have one more question. I know this is probably kind of far-fetched, but I seen on the news about 2 months ago where a ship was pulling up its anchor and it snagged on that transatlantic line that crosses over or crosses under. I mean, is there any possibility that where would the liability lie if that ever happened? I mean, I know there's ships that drop their anchor and it could easily snag, I suppose. I don't know, is that transmission line just lying on the bottom? I suppose it is. Ain't much else you can do about it.
Actually,
I just wonder where the liability would lie.
Yeah, no, it's a good question. But just to be clear, the transmission line itself is buried 3 feet down under the lake bed. So it would be unlikely, I think, that an anchor could hit that. But in the event that something like that did happen, the project does have insurance, and I would imagine that would just be an insurance matter that the line would have to be replaced or spliced. And despite the fact that this cable is like 10 inches in diameter, I understand it can be sliced if there's any situation in the future where it has to be spliced and replaced.
Mm-hmm. Oh, but 3 feet under. Yeah, that's good.
Yeah.
Thank you.
Yes.
It's Melba. Mark, before you move on to Nicole.
Sure, no problem. Go ahead, Melba, you have the floor.
Yeah, I like the opportunity of having a new approach and using it for, as Hazel said, bigger things. I like what Nathan said. We got the flexibility of how we're using it, but I'm continuing to not understand the numerous projects that you've already funded. I'm concerned of ongoing project applications which meets the needs of grassroots people in the community. Will that process still continue?
So yeah, I don't want to speak prematurely here, but we are working on this new model, which we call DevCorp 2.0, and we are, as part of that model, looking at interesting ways, because we hear the challenges. We know the council departments and programs need funding, and we know that we can generate that funding, maybe not to the extent we want to today, but certainly in the future. And so we're working on a mechanism that would direct a significant portion of our annual cash flow to the council. So the council can decide what big ticket items they want to invest in over the course of time. And there'll be revenue certainty for the council, if it's roads or bridges or what have you, housing. That's the council decision. We'll just send the money. But we're still intent on keeping an amount back to fund those grassroots priorities for the community, because they do touch our community in interesting ways through language programs and things of that nature. So, the proposal is not even fully vetted yet, so I don't want to get too far down the rabbit hole on this, but other than to say we're thinking about this deeply, and it's under development for the better part of a year. And I expect that this will come to the council before the end of this year with a proposal from the governance group to implement a new structure.
Thank you.
Okay, thanks, Melba, for your comments and questions. Back over to you, Matt.
Yep. So moving on, the Ieso purchase option. And so, as I mentioned earlier, the contract we have with the Ieso is an agreement for them to purchase power for 40 years. But the asset itself has an asset life of 55 years. And so we don't know, we can't predict what in 40 years time, what the price of power will be, what the demand requirements will be, or whether even the transmission line will be needed. We don't know. But at the end of 40 years, the Ieso has negotiated to have the right, the option to purchase the asset from the ownership, which would include us if we're an equity owner, for an amount equal to approximately $227 million. That would be the net amount, net book value amount, less any outstanding debts and obligations. In the event that that happens, at year 40, Six Nations would receive approximately $11 million as a bullet payment for our ownership interest. So we would get bought out for $11 million in year 40. Now that's best looked at as a worst case scenario in my mind. That's because we don't have uncertainty what happens in year 40, but we do have certainty that worst case, we'll have that money flowing to us. But rather than proceed with the sale, and I know the Ieso's interest is not to enter into that purchase agreement, their preference at this point is to extend the contract for an additional 15 years. In the event the contract is extended, we would earn our 10% share of the future profits, which we estimate to be as high as $38 million up to year 55. And so this is be the best case scenario. And we estimate that in the best case scenario, Six Nations will generate as much as $70 million over that 55 years. But as I mentioned, there's no way to predict this. And at some point in the future, I'm not going to be here 40 years from now, somebody will have to negotiate with our partnership with the government to either take the bullet payment, sell the asset, or extend the contract. But right now we've got both the upside on the contract extension covered off and the downside being the buyout number pegged. So we're protected that way. The other notable change is subcontracting and employment opportunities. They were referenced in the term sheet. We have had and been successful in having language added into the engineering, procurement, and construction contract and in the CBA agreement to ensure that subcontracting and employment opportunities are made available to Six Nations. And in fact, A6N has already engaged with ITC and their contractors on subcontracting opportunities and capabilities. And ITC is in active talks with Grand River Employment and Training on potential job opportunities associated with the project. Now, to be clear, this project takes 3 years to construct. So it's a 3-year development construction cycle and will not be in operation until 2027. So even the benefits we're talking about from the limited partnership model, or whether it's royalty or limited partnership model, will not flow until 2027. The fourth notable change was ITC introduced something called the Deferred Equity Participation Option. Long story short, this is not an attractive option for us. Effectively, what it did was defer the right for us to decide whether or not we wanted to be an equity owner as far out as 2 years after the commercial operation date of the project. While that might seem attractive because it takes us through the construction period, what it does is the first 2 years after construction, the funds will not flow to the community. They'll be parked in a bank account, an escrow, if you will, until we make a decision. And if we make a decision to be an equity owner, we would have to bring our own money. So we would not have access to the incremental senior debt that they currently have arranged for us. So that in and of itself means that we would not be able to secure long-term debt beyond 20 years, and which means interest rates would be higher and we would be exposed to renewals at various times in the coming years, and rate volatility may or may not be attractive. So that option is, I think, it was something interesting that we had to look at, but it's certainly not an option that's attractive to us because we have to bring our own money and we don't want to do that. A couple of other key points that are not necessarily economic driven, but are important to help us make an informed decision around the project. And these are notable and important certainly to us and I think to the community generally. And the first one is greenhouse gas reductions. One of the reasons I believe that the project is valuable and should be supported is the project will remove between 80 and 150 million tons of greenhouse gases in the next 40 to 50 years. That's important. It demonstrates that we're doing our part. We're already a big investor in renewable energy, and I think that we are doing our part, but this is an example of additional support we can lend to that interest. As I mentioned earlier, the second one is optimizing our renewable assets. So when the power gets generated from our wind farms and solar farms, if it doesn't get consumed, it's lost. And it gets paid for by a ratepayer, including us. And it's an imperfect system. And as a result of the lack of tools, it actually hurts us economically in our investments because we can't run those assets as well as we could if we had the ability to send that power to alternative markets and make money. And so this project does have the ability to optimize our renewable energy assets. And then the other point, number 3, there is to maximize existing energy assets. And so we all know the Nanticoke transmission corridor. The old coal plant was decommissioned and closed, but that transmission corridor has a 4,000 megawatts of transmission capability and is highly underutilized. And so the Lake Erie Connector will make use of that existing asset. And why that's important is why not use the things we already have before Ontario goes and builds new transmission lines? And so in my mind, let's use that transmission corridor for this purpose so that Ontario doesn't have to go build a new transmission corridor somewhere else and cause further environmental impact. And then the next one is energy security. And so we all know that when we need power, we need it. And so, as society continues to grow, there's going to be increased demand on energy reliability in our homes and schools and hospitals. And the Lake Erie Connector provides a conduit to another market that provides more certainty on energy access. And the last point I talked about earlier was ratepayer savings at the household level. It's projected to trigger $4 billion in ratepayer savings, about $100 million a year for the next 40 years. And this will benefit all Hydro One customers, hydro customers, not just Hydro One customers, Six Nations included. That doesn't mean free hydro, but it's designed to help. It's going to start taking hydro bills in the right direction as opposed to the wrong direction. And so based on all of the materials we've talked about and all of the research and due diligence that we've done, the board of directors and management have come to a recommendation. And the recommendation is that the council, first of all, approve the Lake Erie Connector Community Investment Review Report as presented by Dillon Consulting, and that the council choose the equity option in the 10% equity option in the Lake Erie Connector project, and that the council approve Chief Mark Hill to execute all required definitive agreements to complete that ownership interest, subject to any additional changes vetted by our legal counsel. As I mentioned earlier, things are changing every day, so there may be some minor language changes, but nothing that would alter the deal structure. And that the council approved the community benefit agreement, which is the amount of funds that will flow directly to the community in exchange for the council providing their support for the project. And then the council is to read second reading on all of the above. Now, that being said, I just wanted to share a couple things. The community benefit agreement actually itself, and it was attached in the package, Article 6 speaks to the support requirements for the council in exchange for receiving the community benefit payments. And under section 6.1b, it says that the council will refrain from and take reasonable steps within its power and authority to prevent or stop members from any actions that delay or block the development, financing, and construction, and so forth. But it goes on to say that for greater certainty, reasonable steps within the council's power and authority does not include commencing legal an injunction, and the Six Nations First Nation will not be obligated to take such steps pursuant to this agreement. So we're sensitive to the fact that, unfortunately, in the past in this community, there have been injunctions against their own people. That is not a requirement in the support agreement in this particular case. Now, if for whatever reason we do get offside with the support conditions, and I can't imagine how that could be, but if we did, there is a provision that would allow ITC to withhold the benefits from our limited partnership interest to make them whole on any damages that they may incur as a result of us not fulfilling our support obligations under the community benefit agreement. And so that's something called a set-off, and that exists in the limited partnership agreement. And basically what it means is if the court decides that we're guilty and we're negligent and we've cost the project of $500,000, the general partner of a limited partnership has the ability to withhold that $500,000 from our limited partnership distributions in the future. Again, it's a way in which that they can recover costs that they've expected us to the support conditions to help. And I can't imagine how that could happen because we can do everything within our power and authority as it's defined in the agreement. And it does not include seeking an injunction. So as long as we do everything that's set out in the community benefit agreement, we should be fine. But nonetheless, there is a mechanism that I need to raise with the council so that you are aware that there are consequences of not following through on the support conditions captured in Article 6 of the community benefit agreement. With that, I'll stop there, Chief.
Okay, thank you, Neil and Matt, for walking us through the presentation this morning. Again, there's been a number of attachments and documents that can still be found on snfuture.ca, if I'm correct, for community to also further look into the reports and as well as the additional documents. I'm going to continue to open the floor at this time for any questions, comments from the council. Again, there is, as you see and noted on the document, recommendations, and which was just on the screen, that you'll find at the back of the memo with the noted changes in there of any vetted changes by legal counsel. So again, looking to any further questions or comments. Okay, I'm not seeing or hearing any at this time. Again, we have had, and I do, even on these types of projects or initiatives, we are currently still working, with the Development Corporation and other, parties in relation to engagement. I know it's never, enough when we get to these big decisions that need to be made on behalf of community. And so really looking at ways to further get creative in a sense of engaging community and getting feedback and input on different projects and so forth. So we're going to continue that work as we move forward here. But in relation to this specific project, I know there has been a lot of reading, a lot of material, a lot of due diligence done to get to this point, which is why we've called a specific special council meeting just on this matter alone. So that we could be able to have this full-on deliberation and discussion in terms of where do we go from here. So as noted, there are recommendations 1 through 5. If there are no further questions or comments, I will look to a mover and seconder for recommendation 1 that reads that the Six Nations Elected Council accept and approve the Lake Erie Connector Community Investment Review Report prepared by Dillon Consulting. Again, this is the number 6 report that we've received. It's been part of your packages for review. If there's no further questions or comments, I will look to a motion for a mover and seconder for recommendation 1.
I'll move, Melba.
Moved by Melba. Is there a seconder?
I'll second.
Second by Helen. Are there any further questions or comments in relation to recommendation 1? Thanks, Nicole. Seeing or hearing none, it's been moved and seconded. I will go to the vote. All in favor?
Favor.
Any opposed? Seeing or hearing none, motion is carried. I'm going to continue to keep going down the recommendations. Second recommendation reads, which is on your screen as well, that the Six Nations, if we could just add again of the Grand River elected council, accept and approve SNGRDC's board of directors recommendation to complete a 10% equity ownership option in the Lake Erie Connector project to be held by the Six Nations of the Grand River Development Corporation. Is there a mover and seconder to recommendation 2?
I'll move that, Chief.
Moved by Carrie, seconder.
I'll
I'll second
second.
the motion, Melba.
Oh, I heard 2. I'm going to go with Melba, seconded by Melba. Further questions or comments in relation to recommendation 2? Seeing or hearing none, I'm going to go to the vote. All in favor?
Favor.
Any opposed? Seeing or hearing none, motion is carried. Recommendation 3 again reads on your screen. Again, this is the only difference is the highlighted in bold. Number 3 that reads that the Six Nations of the Grand River elected council approved Chief Mark Hill to execute any and all required definitive agreements to complete the 10% equity ownership by the Six Nations of the Grand River Development Corporation in the Lake Erie Connector project, subject to any additional changes vetted by legal counsel. I'll look to a mover and seconder on recommendation 3.
Oh, it's Hazel.
Moved by, sorry, was that Helen?
Yeah.
Moved by Helen and seconded by Hazel. I'll now call for any further questions or comments in relation to recommendation 3. Seeing or hearing no further questions or comments in relation to recommendation 3, I'm going to go to the vote. All in favor?
I was getting ahead of myself here.
Any opposed? Seeing or hearing none, motion is carried. Moving on to recommendation number 4, which reads that the Six Nations of the Grand River elected council approve the community benefits agreement for the Lake Erie Connect project, subject to any additional changes vetted by legal counsel and further authorize Chief Mark Hill to execute. Looking for a mover and seconder on recommendation 4.
I'll move.
Moved by Helen, seconder.
I'll second.
Second by Carrie. And I'll now go to any further questions or comments. Seeing or hearing none, all in favor?
Favor.
Any opposed? Seeing or hearing none, motion is carried. The last and final recommendation 5 is that the Six Nations of the Grand River elected council waive second reading on all of the above. Is there a mover and seconder to that effect?
I'll move, Melba.
Moved by Melba, seconder.
I'll second.
Second, Hazel.
Seconded by Hazel. Are there any further questions or comments? Seeing or hearing none, all in favor? Any opposed? Seeing or hearing none, motion is carried. Okay, at this point in time, we have made the decision points. You've heard them as we maneuvered through the recommendations. I just want to say at this point, congratulations to everybody involved. This is, I think, a great step into where we have to go and continuing to look at our own source revenue in these types of projects. So I'll look to Matt off the line and Nicole to execute any motions that were just passed with Tammy in the Chief's office for signatures. And then we will look to next steps from this point. Is there any final questions or comments on your part, Matt?
No, just thank you very much for the audience. It's been many, many months and I think years that this project's been under consideration, and it's nice to finally put a decision behind us. And so thank you very much for the audience and the time.
We appreciate you as well again, and thank you to Counsel and everybody who has joined us this morning into the afternoon. That does complete our special council meeting, and want to wish everybody a great day and look forward to how we best move forward as a community collectively together. So appreciate everyone's time. Have a great day. Just before we leave,